Good morning, Ian Cooper here. Hope this finds you well. For those that have been asking, we will include an open and closed position portfolio in time for our next video. My apologies for not having that up. Markets are still in a bizarre situation. One, we just got a weaker than expected jobs report, which sent markets lower late last week, as you can see on the screen right now. Two, that jobs report could push the Federal Reserve to get even more aggressive with rate cuts later this month, potentially a half a point cut. Three, if the Supreme Court voids President Trump's tariffs, the U.S. may have to give back half of the tariffs collected to date, according to the Treasury Secretary, which the court could rule on by next summer at the very latest. While the White House believes the Supreme Court will rule in its favor, if not, the U.S. may have to give back as much as $750 billion to $1 trillion in tariffs collected. In short, there's a lot going on that could have a substantial impact on markets that have already become excessively overbought at historic highs. What's also worrisome is that the Shiller PE ratio is now at its second highest level in history at 38.93. The only time it's been higher was around the crash of 2000. And unfortunately, per history, when this PE ratio gets this hot, it doesn't always end so well. So it's important to hedge for potential downside risks, which we can do with the UVXY and the VXX, for example. Also, last week we highlighted opportunity in the DIA September 19, 2025 452 put, which traded at 585 at the time. These jumped to a high of 850 last week. They're now back to 588, where we are continuing to hold the position. As for new opportunities, we're watching a few, such as AMD and NVIDIA. What we want to do right now is we'll wait to see if they're setting up to pivot higher before we buy a put or a call. We'd rather not just take a wild guess and hope for the best and lose your money, which we don't want to do at all. So let's do this. Let's just hold a DIA put mentioned a moment ago. And if the tech stocks we're watching work out, we'll put out a note letting you know exactly what to buy. If you look at the AMD chart on the screen right now, you can see AMD broke below its 50-day moving average, that blue line right now. If it also breaks below double bottom support around 150, 114, it could potentially drop to about 140. At the same time, the technicals on RSI, MACD, Williams percentage range are telling us that AMD could pivot higher. However, to be safe, we want to wait for confirmation, which would include a potential uptick in AMD before we race in to buy it. We'd rather not buy and then watch it fall apart on something bizarre and lose money. Remember, if you rush a trade, you could take a bad loss. We're going to go ahead and wrap things up here. If you have any questions, comments, or anything that we can help with at any time, feel free to reach out. Again, if we see a hot opportunity, which we expect to see this week or even today, we will put out another note letting you know exactly what to buy. We would rather not rush out a trade in this market as overbought as it has become. Because if, again, you rush a trade, you risk a loss. And we don't want to lose any money. We just want to bring it in. So let's have a little patience. Let's wait on the sideline for a little bit today, and we'll have more to you shortly. Thanks so much.